Okay, hi guys, Zaheer Anwari here. Can I get a quick hello that you can hear me and that you can see my screen as well? Hi. Okay, I think we are good to go. Yeah, and you can see the screen as well. Yeah. Okay, fantastic. Okay. Hope you're well, guys. Don't know how many people there are in the chat room, but hopefully there are a few of you. I can't see anyone in on the online chat, but hopefully through YouTube there will be a few more people. Unfortunately, I can't communicate with you all through the current platform that we're using. Okay, I hope you're well. Hope you all had a good week so far. Um, just to give you a brief background of myself, my name is Zaheer Anwari. I'm a trend trader. I've been trading since 2007, and as a trend trader, I'm looking for long-term opportunities in the market. I really try and encourage people to get away from day trading and scalping and intraday swing trading and whatever you want to call it. If you're using a lower time frame and if you're exiting on a lower time frame, then you really want to get away from that logic, because that is not going to help you grow an account, and it's not going to help you achieve the goals that most people want to achieve in trading, which is ultimately financial freedom and to become a full-time trader. And day trading is not going to allow you to do that. If you've got vast sums of money available to you, then you may have a chance of achieving that through day trading. But if you don't have vast sums of money, then day trading is not the way forward. It's sold to you as the way forward. It's promised to you to deliver riches, but as we know, very few people succeed in trading. And for that, you have to look at their approach and you have to have a different approach. And you'll find that most people who fail at trading are on lower time frames. They're all day trading, they're all scalping, um, and they're all chasing a dream which will remain a dream and will never come to fruition unless you start looking at a different approach. Um, So that's my approach here. I'm a long-term trader. I take a few opportunities a year and I hold these positions and I compound into them. It's a far simpler approach. It's far more consistent and it's proven. And when I say it's proven, we just have to name a few people: the turtle traders, Richard Dennis, John W. Henry. If you look at investors like Warren Buffett, George Soros, you've got Jim Rogers as well. You look at all of these guys, regardless of whether they're traders or investors, they're all long term. And that's the approach that you want to have. Okay, before I actually get into the charts and do some analysis, I'm going to direct you guys to a few websites. So first and foremost, if you're here in London or if you're around the UK, I'm doing a training which is zaheer.live/seminar. There's still a few places left on here. The first day was already booked out really quickly. Second day, we've got, I think there's 2 or 3 spots left. It's £195 plus VAT for the day, but it comes with a whole month of community support, weekly webinars, watch lists, software, tools, discount and e-signal. There's just a lot that goes into this. So if you're interested, please check out the following website, which is zaheer.live/seminar. If you're abroad and you cannot attend the day of training, but you want to get involved, then you can do the online version of the course, which is apprentice.live/Zaheer. This is £99 plus VAT. If you're outside of the EU, then you don't pay the VAT, so it'll be £99 for the month. And it's exactly the same as the training on Friday, it's just online. Okay. In addition to both training courses, you'll be given this ebook, which is the Almost Complete Guide to Trading. If I scroll down, where's it all gone? Looks like it's frozen. Bear with me 1 second. Yeah, there we go. All right. So the Almost Complete Guide to Trading. This is a 60-page ebook written by an amazing lady called Anne Chapman. It's the lady who taught me how to trade, and it's an in-depth ebook all based around trading for the private trader. And that's what we are here on this webinar. And when people come into FX Street, I'm assuming that pretty much everyone is a private trader. So if you're a private trader, you want techniques that are relevant to you as a private trader. If you're looking at hedge funds and institutions and trying to copy them, you have to question that approach, because institutions and hedge funds and banks, etc., they have large sums of money, millions into the billions. Most private traders start with thousands. So you cannot compare your approach to how the institutions trade. You have to think differently, you have to act differently. You need an approach which is relevant to you as the private trader. This ebook will get you in the right on the right path to that. And you can see it starts with a trading bias, and it goes all the way through to the trading plan. So it's in depth and covers everything in between. If I scroll down, you can see, yeah, we've got 60 pages, and there's your trading plan at the end. In addition to that, you've got all your charts, everything's annotated. It's just a lot of information in a very good, well-written ebook. Okay, this ebook will be given to you as part of the training. So whether you go for the live training or the online training, that ebook will also be part of that training. Okay, so if you want to contact me, you can email me on my email address, which is zaheer@zaheeranwari.com. So it's just my name, zaheer@zaheeranwari.com. If you email me letting me know you're interested in the training, I'll get the information out to you. Okay, let's move on. Let's move on to the charts. So I'm just going to share the charts with you. Just bear with me 1 second. Just waiting for, there we go. Okay. All right, so administrator, can you see my charts, please? Yes, okay, fantastic. Okay, so this is the this is a typical chart setup of mine as a trend trader. So I have the monthly chart in the top with the major levels of support and resistance. I've got the weekly and the daily time frame at the bottom with the 200 moving average. So here is the 200 moving average on the weekly, and here is the 200 moving average on the daily. You'll notice that the color changes from blue to pink. The 200 moving average is heading up, it will remain blue. The 200 moving average starts heading down, it will turn pink. So it tells me the angle of the 200 moving average, which just makes me, it gives me an added criteria to look at. I don't always look for that. It's not, you know, the moving average, particularly the 200, it's a lagging indicator. It's slow in terms of following price action. So I don't need to wait for that indicator to be the color that I want it to, but it's just a good confirmation as and when it happens. In addition to that, you'll notice that I don't have the standard red and green candles. I have a trend filter that sits over the top of price. Red is where the trend is bearish, green is where the trend is bullish, and black is more of a consolidation area. So what I'm looking for is alignments, and this is something that's crucial in trading. So the way for me, the best way for me to explain this is, if the weekly chart is big brother, the daily chart is little brother. What I want is little brother to be following big brother. So whatever the weekly is doing, I want the daily to be doing exactly the same thing. So let's start with the monthly time frame. Let's start with the Aussie dollar, US dollar, and the monthly time frame. What you'll notice is that price is inside of these pink lines. These pink lines are the annual levels of the previous calendar year. So as we're in 2017, where it says PH, that's the high of 2016. PL, that's the low of 2016, and PC, that's the closing price of 2016. The high and the low gives me the range of the previous calendar year. What I'm looking for is price to be trading outside of this range. If price is trading inside last year's range, that's January to December 2016, then I'm not interested in these currencies. What I'm looking for are high probability environments. I'm looking for an edge. I'm looking for a bias. When price is inside these pink lines, when price is inside the range of last year, there is no bias. The market is just consolidating. There's no edge to this. I want price to be above the high, where we have a bullish bias, or below the low, where we have a bearish bias. Inside the pink lines, it's a consolidating market, and I stand aside. So for that reason alone, Aussie dollar, US dollar is not something that I'm particularly interested in. It is starting to gain strength, but until it actually breaks out of the pink lines, until it starts until it's broken above the pink line high of last year and the round number 0.8, I'm not interested in taking any trades. In addition to that, price is below the weekly 200 and the trend filter is green. And on the daily, price is above the daily 200 trend filter is green. So the fact that the weekly and the daily trend filter are green is a positive sign, because this may be showing an early sign of a bull trend. But that's not enough for me to start getting in, because the market lacks a real edge. The market lacks any alignment. It's inside the pink lines. It's in a long-term consolidation. It's below the weekly 200. It's above the daily 200. There's no alignment. I want price to be above the weekly and above the daily 200, or below the weekly or below the daily 200. Right now, we have nothing that is telling me that we have a clear trend direction. So I'm going to be standing aside on this. So let's have a look at something that has a bias to it, but has stalled in recent times. So if we look at it, the currency that I'm looking at is the US dollar Turkish lira. We can see that it's been in a bullish trend for quite a long time. Recently, it's found some kind of resistance, and that's because of the round number 4 acting as a level of resistance. We can see at this point here that when price came to 3, you can see it trended to 3, remained in consolidation for quite a long time. Then we've had a breakout to the upside. So price is now struggling at the round number 4. The fact that it struggled at 3 was a potential sign that it was going to struggle at 4. And we're seeing that at the moment. Having said that, price is trading above the high. You can see there's the pink line high of 2016. Price is trading above that. So overall, it still has a bullish bias to it, a bullish edge. Go to the weekly. Above the weekly 200, trend filter is green. Above the daily 200, but the trend filter is red. Now, I have positions running. I've got positions running since around this level here back in December. So I have held my positions all the way through. These positions are now taking a little bit of a hit. What we have here is a support level. So previous resistance now acting as support. If we look at the history of the chart, we can see that price likes to come back to retest this level as and when possible. These resistance levels turn support, excuse me. There we go. So if we have a look, we had a trend to the upside, price failed, came back to retest this level. Almost a 1, 2, 3 chart pattern. Trend to the upside. This time what we had is a 1, 2, 3 top. 1, 2, 3 top in a bull trend at resistance is a potential reversal in the trend, and that's exactly what we're seeing now. We're seeing the market reversing against us, but we do have a support level here. If this support level is broken, that to me then will be significant. For now, this requires patience, and what we could be seeing is price fail at this level here and then a bounce back to the upside. If price breaks and closes above this resistance, I will look to add further positions, not directly above this resistance. I should add above the round number 4. So once it's cleared this resistance and the round number 4 resistance, and that becomes support, then I will look to add further positions. For now, I've got multiple positions in play which are in good profits. Yes, they're taking a bit of a hit, but that's all part and parcel of trading. I am willing to give back a little bit of money at the end of the trend in anticipation of a potential trend continuation. One of the skills of trading is to think in terms of risk to reward. It's not a skill that people are too accustomed to doing, and it's a skill that's generally overlooked. You have to think in terms of risk to reward. In trading, and particularly the retail world, everyone seems to be well informed. You speak to them, they know about risk management, they know about risk to reward, they understand the trend is your friend. They're able to recognize dojis and candlesticks. Everyone seems to be well informed, but then the question is, why is it that so many fail? And that's because being informed is not the same as being knowledgeable. Being informed simply means being able to understand certain terms. Being knowledgeable means actually being able to put that into practice to see consistent returns. So don't get caught up in being informed. You have to be honest with yourself and say, well, I'm not getting the results that I want. Why is that? There's obviously something missing. one of the skills that you must learn to start thinking in is in terms of risk to reward. To make money, you have to risk money. But risking money doesn't have to be large sums of money. It's all about risk management, risking small, but holding when position starts returning a profit and then compounding into it. Okay, so you can see overall a bullish bias above the pink lines, above the weekly 200 trend filter is overall green, above the daily 200 trend filter is red. So this is only one factor suggesting that we could see further bearish price action, but there's multiple factors telling us that we could see further strength in the market. This is where we apply patience and allow the forces of the market to take over. Okay, let's have a look at what's happening on the pound currencies. The pound currencies were weakening somewhat today, but they seem to have reversed a little. You can see that the pound US dollar has been in a bear trend since 1.7, round number, going back to 2014. Long-term bearish trend is now at 1.2. The pound has taken a real beating in recent years. 1.2 support. If we go to the weekly, below the weekly 200, there's your current area of consolidation. It's just going sideways. If we go to the daily, below the daily 200, consolidation in a lot more detail. Messy looking chart. This is not the kind of chart that you want to get caught up in. You want to look for smooth, easy trends, not ones that are choppy, that are likely to move against you in large whips or actions. And another mistake that a lot of private traders make is that they're using tight stop losses. So if you're using tight stop losses and you're risking large, then there's a very good chance that you are going to blow an account. Okay, so for now, I would say that the pound dollar is not one that you want to get caught up in. Okay, right, let's move on. Pound Aussie dollar. Okay, pound Aussie dollar is one that I am short on. You can see that the pound dollar has been bearish since 2.2, and it's now currently at 1.6 support. And you can see that price is still inside the pink lines, but we are starting to see weakness to the downside. If we look at the weekly chart, we're below the WVI. There's your current area of consolidation. So very, very similar to the pound US dollar, except 1.6 acting as a support level. And if we go to the daily, also below the daily 200, area of consolidation. What we now require is a breakout. Now, I am short on this. I've been short on this since around the 1.7 resistance. We have seen weakness, not clean, sustained trend. That's what we're really looking for. What we want to see is a nice movement. Now, if you look at this trend to the upside, nice, clean, linear trend to the upside, that's what we want to see going forward. But this is all very, very choppy. I have managed to find a good entry point off the 1.7 resistance level. Indecision, seen weakness to the downside. We then had a pullback, wasn't stopped out, movement back in the direction of the trend. But until it breaks through this support level, this will be a consolidation. So what we now need to see is price clear 1.6, this pivot, all of these pivot levels here, and the major pivot down here, and that will then suggest a continuation of the trend. So patience for now on the pound Aussie dollar. All the pound currencies are doing something very, very similar. Pound New Zealand dollar, I am also short on. We can see that it's trading below the previous all-time low, which is a major support level, now acting as resistance. We can see that price is inside the closing price and the low, so it's in a consolidation. However, below the weekly 200, consolidation over here, and below the daily 200, there's a consolidation in more detail. Again, just not a very attractive looking chart. Now, the discussion that I tend to have with a lot of people is that, well, yes, when it's in consolidation, all you need to do is draw support and resistance and go short of resistance and long of support. It's actually, if it was that easy to do that, recognize that here is a resistance, here is a support, and price perfectly bounces between these two levels, then everyone would be range trading and everyone would be very successful and everyone would be very rich. And we know that's not a possibility. So stay out of consolidating markets because there's multiple levels of support and resistance. It's not just two hard levels that make the high and the low. You've got a whole manner you've got a whole manner of support or resistance levels here. So if I highlight all the potential levels of support and resistance, you can see for yourself it's not as clear cut as just simply drawing the high point and the low point, and price is going to be bouncing all over these pivot points. So this is why it's not easy to trade consolidating markets. What you want to do is wait for price to break out of this consolidating market and then go long or go short depending on what overall bias is of the market. So pound New Zealand dollar, I've been short since around this point here. You can see that got triggered in, market just went sideways. We had a move to the downside, we've had a pullback, and again just finding resistance at this point around here. What we're now looking for is a bounce to the downside. Until that happens, I'm not looking to enter any more positions. Okay, let's have a quick look at the pound Japanese yen. Pound Japanese yen, again, if you look at all the pound currencies, very similar. Inside the pink lines, we require a breakout. Below the WVI, below the weekly 200, above the daily 200. So below the weekly 200 moving average, above the daily 200 moving average. Again, no alignment. If the weekly is below the 200, we also want the daily to be below the 200. The weekly is above, we want the daily to be above. We don't want the weekly chart and the daily chart to be out of alignment. That's not what we're looking for. And this is unfortunately the feature of foreign exchange at the moment. It's very choppy, it's very messy, there's no clear trends. And so if you're only trading foreign exchange and you're struggling, this is the reason. It's a range-bound market. There aren't trends. Trends are proven to be the most profitable periods in the market. Regardless of what anyone will tell you, trends are the most profitable parts of the market, and not trends on the lower time frame, guys. I'm not talking about a trend that lasts 2 hours. I'm talking about a trend that lasts weeks and months. A 2-hour trend just defeats the purpose of what is a trend. A trend is something that's in play for a long period of time. That's in its true essence, that's what a trend is. So a trend on a lower time frame, most people are just fooling themselves to think that is what a trend is. It's not. So you've got to get away from that thinking. Look at the bigger picture. Okay, so those are all the currencies. There's not much going on. I mean, let's have a look at the euro dollar. I know there's been weakness on the euro dollar, but if you have a look, the euro dollar is still trading within consolidation. What we really need to see is a breakout. And as the trend prior to consolidation was bearish, what we require is a bearish breakdown. And we want to see price move towards 0.8, which is the low of 2001. So we need to see a breakout. If we look at the weekly, below the weekly 200, there's your area of consolidation. And if you go to the daily chart, below the daily 200, and again, yes, we're starting to see weakness, and we're looking at this in hindsight. Everything's better in hindsight. But for me, until price actually breaks out of this consolidation, this is not a currency that I really want to get caught up in. But it is starting to look interesting. Okay, let's have a look at one more currency. We'll have a look at the euro New Zealand dollar. Okay, euro New Zealand dollar is a currency that I am short on. I went short when price broke below the pink line, and we can see now that price has gone back above the pink line. I have a very, very small risk allocated to this. I think even 0.5%. 0.5% is tiny. But if this then goes on into my favor and starts returning me a profit, and I'll start compounding, that is how I will then see very, very good returns. So an initial 0.5% risk can return me 20% through adding and scaling in. So my first initial position, it has a 0.5% risk allocated to it. If I allow that to run for as long as the trend is in play, over a period of 4, 5, 6 months, that initial risk can go on to return me through compounding, not just on its own, but by scaling in, adding, compounding, whatever you want to call it, can go on to return me 20%. And that's on a single trend. So if I have multiple trends in a year, that's how you make money. What most people are doing is trying to make 10% a week, 10% a month, whatever it is. You're trying to replicate your salary. This is not a job. This is not a 9 to 5. You can't sit in front of the computer 9 to 5 chasing money. It's not how the markets work. That's what you're sold as. That's what you're told, because it's the internet and we have software and you're told that that's all you need to do. It's not how it's done. Smart people don't do that. Smart people enter, hold, cut out from losing trades. In a winning trade, hold those positions and simply keep on adding and scaling. Ignore the noise, ignore the marketing, ignore the news, focus on technical analysis and price. So yeah, that's the Euro New Zealand dollar. We can see it's below the weekly 200, below the daily 200. Overall red on the weekly, pullback. So black on the daily. My stop loss is wide, plenty of space for price to move back further if it needs to. But as I mentioned, if it pulls back too far and it hits my stop loss, so be it. That's part and parcel of trading. My loss is going to be my loss is going to be insignificant. Okay, so that's currencies. For me, there's nothing going on. It's dead. It's a consolidating market. It's a market you want to be staying well out of. What you want to be doing is moving to where the money is. And the money right now is in stocks. So positions that I have running, I've talked about NVIDIA before. We can see this is the monthly chart we're looking at. That is what you call a bullish trend. I entered my first position above $40 back in, I believe it was May of 2016, and I'm long on this, and I'm still long. I haven't been triggered out of these positions just as yet. Weekly above the weekly 200 trend filter is predominantly green. We've got a black bar now, and on the daily above the daily 200 trend filter is black. So overall, looking very, very good in terms of the weekend daily. What we do have in price finding resistance at the high of last year. So that's not ideal. We want to see a breakout to the upside. We also want to see the trend filters turn green again, suggesting strength to the upside. If this weakens further, I've got stop losses in play. I'll be stopped out for very, very, very healthy profit. You can imagine I've been in this since $40, since around here. Very, very healthy profit. So yeah, a good trend, a good trade, a good stock to keep an eye out on. A stock that I was recently triggered into, Southwest Airlines. Now I'm going to mention this. The last time I traded this was back in 2014. Very, very profitable trend. Price came to around $50. After every move, the market consolidates. So it was on this pullback where I got stopped out. After every move, the market consolidates. You can almost have a 1, 2, 3 in an uptrend. And since then, what we've seen is further strength to the upside. Price cleared $50, trading above the high of last year, and we're now seeing strength to the upside. If we look at the weekly, above the weekly 200, trend filter is green. Nice looking trend. This is the same trend as mentioned in 2014. So what we want to see is that continuing up. One thing to notice, guys, look how useful it is to have a trend filter. If you look at it in a trend, it's remained predominantly green apart from the odd bit of black where it's pulled back. If you look at it in consolidation, we've got green, black, and red. So when we've got all three colors apparent, then we're very much in an area of consolidation. Now the trend filter is green again. And that's what we want to see going forward for weeks and months, is we want the trend filter to remain green. This is the daily time frame. You can see that I got triggered in on this bar here. So as prices continued in my favor, I will continue to add and compound as and when necessary. So this is starting to look good again, and potentially we could see this move all the way to $100. Okay, another stock that I am in is Zion. Again, a very good looking stock. So you can see that we had the 2008 crash, as everyone seems to always go on about. One thing to note, if you know how to short a market, then 2008 would have been a very profitable year. What most people do is they simply hold on to long positions, waiting for a reversal, and they've lost everything before they know it. So 2008 for me was a very profitable year, and you can see why. After every move, the market consolidates. The bigger the consolidation, the bigger the breakout. The bigger the consolidation, the bigger the breakout. This consolidation goes to 2009 to 2017. You're looking at a 6-7 year consolidation period. Look at the risk to reward. Small risk for the reward to the upside. This is what you guys should be thinking long term. If we go to the weekly, above the weekly 200, trend filter is green. Go to the daily, above the daily 200, trending very, very nicely. One of my most recent positions I got triggered in, it was this bar here on the gap up. I got triggered and the market immediately went into an area of consolidation. And this is where patience comes in. If I get frustrated and I just close off my positions, I would then be missing out on this move up. So the positions that I already have in play, this is now starting to add further profit and further growth. So about applying patience and letting the markets move as and when they're ready. You can't force the situation, but if you do apply patience, and if you do allow the market to do what it needs to do, in addition to that, if you know how to hold positions and compound, substantial wealth can be made. So Zion, very, very good stock, one that I'm in, and you can see that I have good reward to the upside. Let's have a look at another stock. Another stock that I have multiple positions running on is AMAT. Okay, start with the monthly time frame. Again, nice bullish trend to the upside. I believe I got in just above $30, if I remember correctly. We'll double check in a second. But we can see now that this is moving nicely. And look at the reward to the upside, all the way to $60 potentially. Above the weekly 200, trend filter is green. Above the daily 200, trend filter is also green. It did turn black, but it's now green again. Excuse me. So if you look at this, I got in at, yes, that's correct, $30. I got in around this area here. So dating back to August, this is when I entered my first position. This is August of last year. And you can see that this is now starting to return a profit, a very, very good profit as well. Fastest of moving stocks, but I want my portfolio to be balanced. I don't just want a load of fast moving stocks. I like to have a mixture of fast moving stocks and slow moving stocks. So another example of a slow moving stock that I'm in is DE, and you can see that DE gapped above $100. This is when I was first alerted to this based on my scanner, and it was when price broke above that. So we had a break of $100. Price came back to retested. We had this bit of consolidation. When price broke out here, this is when I entered a long position. I've now since compounded a break and a close above this pivot high, and I would look to add another compound. So it really is a waiting game now to allow price to just move and do what it needs to do. Okay, we'll have a look at one more stock, and this is a UK stock. So I'm based in London here in the UK, so I keep an eye out on UK stocks as well. So it's not just US stocks that I trade. So CAS Minerals, you can see that price had bottomed out around 100 here, and we can since see that price has gathered strength, and it's now at the 600 mark, which is the £6 mark. Above the weekly 200, trend filter is green. Above the daily 200, trend filter is predominantly green. We can see a little bit indecision. That's expected given that 600 is a round number, but I would expect price to break through this level and continue towards 700, 800, 900, and then ideally 1,000, which is the £10 mark. If you have a look, I've got positions running along the length of the trend. At this point here, the market went into a little bit of a sideways movement around the £4 mark. Now, notice one thing. If I just draw that there, what do we have? We've got a cup and handle, a cup and handle. A cup and handle formation in a bull trend is a continuation pattern. So as soon as that was confirmed, what we then had was a retest. Look at this classic price action movement. Break, retest, where the resistance becomes support, and we had a bounce off. So a very, very profitable trend so far, and one that is returning very, very good profit. As this continues to gain strength, I will continue to compound, and I will continue to allow the forces of the market to move within the confines of whatever the price is suggesting. Okay, so that is everything. I'm just going to go back to the charts to see if there are any questions. You trade mainly crosses, exotic? No, I trade FX Ambassador. I trade everything. So as you can see from my watch list, it's not just crosses and exotics. I've got the euro dollar, pound dollar, Aussie dollar, US dollar. I've got all the currencies on my watch list. But what I don't do is limit myself to just the majors, because the majors aren't always in trend. You want to have the crosses on your watch list. You want to have the exotics on your watch list. You want to be able to move between trending instruments. So I have everything on my watch list. You can see that for yourself. Aussie dollar, US dollar at the top, goes all the way down to the South African rand, Japanese yen at the bottom. So extensive watch list. Aussie dollar, your Kiwi. Okay. You want me to have a look at the Kiwi? I think that is your question, because you haven't really put a question there. But let's have a look at what the Kiwi is doing. I mean, given the logic that I've gone through, it's inside the pink lines. There's your high. There's your closing price. Just not a very good looking chart. Below the weekly 200, very choppy weekly time frame. Above the daily 200. So we're below the weekly 200, but we're above the daily 200. Trend filter, in addition to that, you can see for yourself, trend filter, black, green, red, black, green, red. So for me, in all honesty, this is a very unattractive looking chart and not one that I want to get caught up in. So I hope that answers your question there, FX Ambassador. Not one for me. If you look at that compared to the stocks that I'm trading, you can see how the stocks are far smoother. And stocks have been supremely profitable in the last year or so. Very, very profitable. People need to really start looking away from just FX. It's overrated. It's overrated. Start expanding, building that portfolio. Okay, I think that's all the questions. So before we end, I will quickly direct everyone to my social media sites. Okay, so I think you can see my screen. So just as a reminder, if you're here in the UK and you want to attend a day of live training with myself, I'll be running it at £195 plus VAT, and a whole month of support, software, weekly webinars, training, currencies, stocks, watch list. There's just a lot that goes into this. It's a great starting point to take your trading to the next stage. Get away from the short-term trading that I keep on telling you guys to do. Get away from that. You've got to at some point let go and realize that there is a better approach. If you want to do the same training online, apprentice.live/Zaheer, much cheaper. If you want to do it online. Of course, if you're here in the UK, you can do it online as well. Now, go to my blog site, medium.com @Zaheer Anwari, medium.com/@Zaheer Anwari. I update this all the time, so you can see that today I did something on Nvidia. Yesterday, I did something on financials on the move. That's the sector. I talk about when I got triggered into Southwest Airlines, which I've just covered. I do a summary every weekend of what's happened in the week. So if I click on this, you can see that I've got a little bit on FX, a little bit on US stocks, a little bit on UK stocks. Okay, and then at the bottom here, I've got links to everything, my social media, training, etc., etc. So the format is pretty much the same on each profile that I put up, rather on each post that I put up. Okay, so check this out. If you're not following me, definitely give me a follow. You will find my blogs useful. I've been on here for about, I think, 6 weeks, 7 weeks. I think it was mid-December. So maybe even 8 weeks. I think it's been about 8 weeks. I got in mid-December and I picked up 1,000 followers so far. So it's all going very, very well. LinkedIn. Yep, please add me on LinkedIn. Facebook, you can add me as well. So just search for me. I've got a Facebook page as well. Now, it'd be good if you guys can follow me on my Facebook page. The reason why I say that is because I do Facebook Lives. So you can see here, I've got a wide trading breakouts. It's simpler than trading pullbacks. If I scroll down, yeah, if I scroll down, another one, what are the differences between aggressive and conservative traders? Yeah, just different things on here. So If you have any questions, if you want to get in contact with me, you can do it through this Facebook page as well. So that's facebook.com/City Trader Lifestyle. Yeah, I think that's everything, guys. And if you want to email me on Zaheer@ZaheerAnwari.com. And as already mentioned, as part of the training, you'll be sent out this ebook, The Almost Complete Guide to Trading by Ann Chapman. Something that's generally overlooked is the word almost. The answers aren't contained in here. This will help you, but it's not all the answers. So to have all the answers, you need software, you need training, you need a good idea of what you're doing. So if you want access to all of this, then just give me a shout on Zaheer@ZaheerAnwari.com. Okay, I think that's everything that I wanted to go through. Let me just check to make sure I haven't missed any questions. Okay, yeah, no questions coming through. Okay, administrator, thank you. For the rest of you guys, have a wonderful week ahead, and I will see you next week. Okay, take care. Bye-bye.